Well, we've got a once again a continuation of the uptrend. I think this is a broken record because this uptrend has been very narrow and tight since January 2nd of 2013, and you can see on a weekly chart on the Nasdaq, for example. It's clearly a manipulated environment by the quantitative easing going full blast from all these major central banks. And as long as the economy stays weak, regardless of what the reports say, the economy is very weak, and I think the Fed knows that. The Fed is, of course, the ones who manipulate the markets and paints this pseudo-rosy picture about a recovering economy, and therefore uses that as an excuse to say, okay, well, we're going to start tapering at some point, and in this 2014. But they also are very careful to add that interest rates will stay low for a prolonged period of time. So if they're going to, you can't have your cake and eat it too. I mean, if you're really going to do an honest-to-goodness tapering, then what's going to happen is interest rates are going to start to rise. So what they're effectively saying is we're going to taper this $75 billion a month that we're printing, and we're going to figure out another way to counter that tapering. So they're doing a juggling act to make sure that rates stay artificially low for the prolonged period. And it's interesting because this is pretty much an unprecedented situation. You look at the market averages, the S&P as well. These things are in a concerted uptrend with corrections contained typically within five. Well, every correction on the S&P and the Nasdaq has been contained within 5 to 6%. So it bodes well for the markets, and in the meantime, the trends are friend. Don't fight the Fed, and we'll continue to monitor our universe of stocks and continue to run our screens diligently and report on the ones we think are going to outperform. And of course, as you all have noticed, we've had a slurry of pocket pivots that have occurred over the last several days, so that bodes well for the internals in the market. Bill?
Yeah, I mean, the market looks fine to me. Look at the S&P here. After you come up to the new highs, you come in on a nice little flag, you're dropping in, you're holding tight, the range is getting narrower, and looks to me like it wants to go higher. Nasdaq, same thing. I like that you mentioned the weekly chart on the Nasdaq, because if you look at this, what do you get? You get big volume here on the weekly, and this would be a 10-week line, so basically a 50-week line, I guess, or is that right? I guess that's what this would translate into on a weekly chart. But in any case,
yeah, that would be the 10. Yeah, that would be the 50-day moving average equivalent.
Right, and so essentially you come down to the line and see the big volume spikes in here where you're getting support off the lows. This thing wants to go higher. I hear a lot of people saying that they're nervous and cautious, and it's like, if you have to describe your view of the market based on some sort of emotional moniker, like a label like I'm nervous or I'm cautious, and what does cautious mean exactly? If you've got stocks like Solar City jacking to the upside like this, what does that mean? I mean, you should be all the way in on that puppy and just running it up higher, and going nuts with that, and you have these other ones. Workday is also moving along here. Let's see if I can pull that up. You know what? I just put this one back. I should be looking at this chart. That's got Nasdaq volume. And here's Solar City today. So you can see the stocks had a nice run here. We picked up the pocket pivots down in here. There's a very subtle one here, here, here. Now it's off and running. You get the jack down to the 10-day moving average. And one thing I would be watching out for in stocks are these yanks to the 10-day, because a lot of times, even though you don't get a pocket pivot move off the 10-day, they will bounce off of there, and especially if it comes down to the top of the base. So you can see this viable gap up was probably a little bit late, but you've got that running, and you got YY running, you got this FireEye running. These things are going bonkers. If you were fully loaded in these stocks, you could be up 20, 30, 40% already on the year, and that's just on 2 or 3. Of course, there are some that you have to be careful with. Cena was a little bit slow coming out of the gate. Got hit with some volume yesterday. In my view, if this thing can't hold above, say, the 10-day or the 20-day on a pullback to the top of the base or into the base because it really never cleared, it's not working. And so if I would sell something like this, and you see it gapping down, so there's one that's not working, whereas YY is working and Kihu is also working. That one isn't. But you notice Kihu also wasn't all that even here because you had a Bible gap up, and this turkey comes right into the 10-day, 20-day moving average confluence, and then turns around and jacks, and it's going higher today. So, you know, it's a little bit of a mixed bag in some cases on these groups because the Chinese internets overall were trying to be strong, but you get one or two that are you know, older names. I think Sina is the older name, and notice how YY and Kihu are the newer names, and they're acting a little bit better. Baidu is the big one, and it's also a little bit weak here. So I think it really boils down to new merchandise. Where is the new merchandise, and what are the best names to be in on that basis? So that's pretty much where I'm focusing my efforts. This morning I'm watching, let's look at LinkedIn, for example. I've talked about this before, I think in the chat room. You have, in this pattern, 1, 2, 3 waves of selling. Each selling wave takes you to a lower low. Notice here you come down to the 150-day exponential. That's this orange line here that I put on. And then you come down to the 200. You bust the 200, and at that point it becomes pretty obvious on the downside. And this sort of pattern, you got to watch for this because people will want to come in and start shorting it. But once you've had these 3 waves, and the fundamentals for LinkedIn really haven't changed, it really becomes risky to short. And so yesterday you get this big pocket pivot, and I think today on the pullback you can buy this pullback. That's what it looks like to me. I don't know if I'm going to hold it. I bought some, for those of you who know about the 620 chart, let's see if I can pull it up here. You can see at the lows, you see how the MACD line here comes extremely deep on the downside, and that's probably where you get into a low. Also today you got triple witching. Is it triple witching or no? Just options expiration, normal options expiration. I never know what the heck it is anyways. But you can see now you came down, you got the what I call the MACD stretch here where the lines get real deep. And so we bounce off of there, and now here we come on a retest. Volume's a little lighter on the retest to get some support off the lows, and now you're trying to turn back up. So I'll come in and take a position here on the pullback, and then if I get a buy signal on a 620 buy where the orange line crosses above the blue line, then I'll go in real heavy. Right now the stock's kind of backing and filling. We're trading around 225, but you're off the lows. I don't know if the movement today is related to options expiration, but that's one way I will play it. So, but again, I think this is something to watch where we get these 3 waves down. I remember back, I'm going to see if I can find this, way back somewhere in here. I think you had 1, 2, no, that wasn't really, there was 3 waves, this might have been it, where you go 1, 2, and then 3 waves down in CRM, and then it turns around and goes higher. But it's something to watch for, and a pattern will look pretty ugly, and you'll think that you want to short it because it looks ugly, but when you start seeing 3 ways of selling in a pattern, a lot of times it tells you the selling, at least for now, is done. And so that's what sets up this move. And you get this pocket pivot. You know, I think the stock's probably down today. You get some overhead. It's trying to work its way around. My guess is it'll try and move higher as the day progresses. We'll see what happens. Twitter, you know, we called this the other day. Shakeout +3. Here's the 61.57 low right here. You undercut, and now you move back up. And on this was what, Wednesday, I guess? Yeah, you had the shakeout +3 buy point, and the stock held yesterday on a little pullback. You know, you can get the buy signal on a little pullback. So if you bought in here today, the thing's gapping up and trying to turn higher. But you may have some overhead in here. I'm not sure how well this is going to work. Sometimes these don't work as well because it's a very narrow pattern. In fact, if you look at the weekly chart, let's move this guy out of here. That's what Twitter looks like right now. And so you can see that it's setting up in a flag. Here, I can make this look less steep. How's that looking? Looking a little better? So you're basically setting up in a flag now and looking for some sort of buy point. You got the shakeout +3 buy point. And I think now you're probably looking for something else. I don't know if we're going to hit enough volume for a pocket pivot today. but it looks like we might get there. I don't know. You need to be higher than, it's only 8 o'clock, so an hour, a little over an hour and a half into the day. Yeah, we could get it. We'll see what happens. We'll be keeping an eye on that. So, would you call that a pocket pivot gap up today, Dr. K? If in fact we trade, I think we have to trade somewhere north of 31 million shares.
Yeah, it's just about 32 million for it to qualify as.
Yeah.
It would be a pocket pivot viable gap up, both.
Yeah. Okay.
And it's had a sharp ascent and a sharp pullback. It's going to be a bit volatile in there, a bit of selling going on that we've seen on the pullback. So let's keep an eye on it.
Yeah, but this thing is not done yet, and I know that there've been some sell ratings. I always love it how stock runs up and then everybody tells you it's overvalued here, and you got a $32 price target, of 35, 42, whatever. But they all come out of the woodwork here, and I wish they would have told you down here, because if they had told you they had a $32 price target down here, you never would have bought it, right? So, anyways, another reason why we don't pay attention to analysts. Okay, last week I talked about the airlines, how they've been acting pretty well, and you can see United is continuing higher, American is continuing higher, and let's see, Love moving higher, has been moving higher. It's off a little bit today. And you even have this cheesy little Save moving higher today. I think you did. Let's see. Did you get a pocket pivot? Maybe right here there was a pocket pivot. This stock is squirrely, but it's working. But I think the message here is what I was talking about last week, and that is that with the airlines working, you look for follow-on groups. Okay, and I remember Bill O'Neill telling me in the 60s he made a lot of money with not only Boeing, which was a follow-on group to the airlines in the 60s, but I think also American Airlines was one of his big winners. And it's one of the reasons why in the late 90s he always referred to America Online as American Online, because he was thinking, his brain, there was some connection there of taking him back to American Airlines. And but anyways, he told me that there were a lot of moves in follow-on groups. Boeing, as a supplier of airplanes or jets, was a follow-on name, and I think the follow-on names today are GoGo and ENT. Now, I think ENT is a stronger name. You have the pocket pivot here. That's where you want to be coming in. But the other thing to note here on the weekly chart is you have a high tide flag breakout, and you're holding up very nicely this week. So even though it's been pretty boring, I've been sitting with the stock and just waiting, and after buying it down here and waiting, either got to pull back to the 10-day where I might really load the boat, but it's acting well. And you look at the weekly chart, that looks like just a nice high tide flag breakout. Now that brings us, of course, to the problem child, which is GoGo. But you can see it's starting to round out what might be the lows of a base, and I've been nibbling on it around under the 23 level over the past few days, because I figured, okay, you're undercutting support here. Everybody sees that. It becomes a little bit obvious. And you are seeing some of the selling dry up. My thinking is that once the insiders that start selling in here on the lockup expiration are coming around and or finishing up their selling, and once they do, this thing could shoot up very rapidly. So I've been wanting to have a position in it, so I decided I'm just going to accumulate under 23. So far that's working. The stock's pushing 24 this morning. And I thought it was constructive that it didn't pull a maneuver like it did on Wednesday, where it rallied up towards the 24 level and then reverses to close down. We've seen that happen here. Same thing happened. This is probably premature, but it may be starting to round out. So I'm not averse to having at least a small position in here and looking for this thing to turn. So sometimes that can work pretty well. On the chat room, we're talking about Intrexon, which was turning down here. Same concept. See how it undercuts the supporting low here, and then turns around, comes back up. Takes a little while to get building up, and then we're off to the races. So this thing's been going bonkers. In any case, I think that you might see something like that happen in GoGo, and then of course Ant is just hanging out there on a high tide flag breakout. Let's see. Another name that came to our attention this week is this NQ Mobile. A lot of hedge funds came in on this weakness. If you look at the mid-December filings I think they're 13Ds. Don't quote me on that. But you'll see a lot of funds came in and added to their positions or even took new positions. And you see the stock then, you get a pocket pivot off the lows here. It's a bottom fishing pocket pivot coming up to the 200 and the 50-day moving average here. Then you back and fill a little bit. Then you get this Bible gap up type move. And now this stock is basically just hanging out tight with volume drawing up after this gap up. And I can see why people might be nervous. You look at this, and that, that makes me nervous, but that's this muddy waters coming after it and slamming.
That was also due to a fraud accusation and
right.
On the company, and so it just plummeted. But Sprint, the deal that Sprint's doing gives it a lot of legitimacy. Yeah, and the fact that these hedge funds who are taking positions, even Ken Oberweis was talking about. I think it's Ken Oberweis Jr. They came in and bought a position. They did their due diligence on this. And so it's tracking sideways, making a little handle here, but I think you could buy a little position in this thing, and it may eventually come out here, maybe not too big in case it rolls over again. But I got to think that the deal with Sprint is very constructive for the company and gives it some legitimacy. Of course, what's ultimately going to give it legitimacy, but the price volume action from here. So I'd be looking for this thing to move out of here and take off. Remember, this thing was a high tide flag breakout here. Well, here and here, and then it blew apart in here, which shows that you got to have trailing stops and you got to be quick sometimes if your stocks get into trouble, because if you don't, you can end up with something like Nu Skin, which is a nice leader acting very well, flashing pocket pivots on the way up. We reported on these on the way up, and then you gapped down yesterday, and now this thing's just gotten decimated, virtually cut in half in the span of 3 days, really. So anyways, let's see. I'm going to answer some questions now before I continue with my babbling here. Taser on the 10-day, yeah, it looks fine. I think you buy it off the 10-day here. Can you review the details of the shakeout plus 3 pattern? Sure. Basic idea, this is a Livermore rule too, so it's not an O'Neill rule, it's a Jesse Livermore rule. O'Neill stole it, just like we stole pocket pivots from Bill O'Neill. Anyways, here's the low here, 58.57 on this one low. You undercut that low, and once you start up through it, you add 3 points to the low here, which gives you 61.57, which coincidentally you hit perfectly on this day here, which is Wednesday, and you close right at 61.57, held tight, and now you're gapping higher. That's the basic rule. You can argue over whether it should be a shakeout plus 4 or a shakeout plus 4.5 or 5 or whatever. And, of course, people can get into that. But I think it's just a matter of kind of watching the stock. I was buying it down on the undercut and just kind of nibbling away, and now you get the move. I'm inclined to sell into this, actually, to tell you the truth, which means it's probably going to continue higher. My thinking is you need to spend a little bit of time going sideways here. And then, of course, you have earnings coming up in the next, when is it? Next couple of weeks, I guess, at the end of January. Anyways, let's see. Can you conversely use 3 waves up as a possible short? No. I like it the way people like to turn things upside down. I know there's the reverse cup with handle, which is really just a head and shoulders, the right side of head and shoulders formation. But not that I'm aware of. It's basically when you're thinking of selling waves, you're exhausting selling on the downside in a base and cleaning everybody out, and that's basically the concept. HLF. Somebody supposedly Ackman, someone's saying, reported to show evidence that HLF has been doing business in China illegally. Doesn't that get you shot in China if you are conducting business illegally? I don't know. In any case, they are shooting the stock. Illumina, someone's asking about that. Climax, I don't think it's a buyable gap up, but that sure is a nice move. Look at that. Just moving higher. It could be climactic. You're up how many days now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You're up 8 out of 10 days to get a big gap up move. It's a possibility. What do you think here, Dr. K? Yeah, I mean, I've been looking at this one, and we've in the past it's had some Bible gap ups on earnings. A couple of work, and well, actually the most recent one worked, but the one before didn't. And it's pretty tight. It's a large cap stock, almost a super cap, one of the larger ones. And right now it looks, I like the weekly perspective because it kind of gives you more of is this Bible gap up? Is this gap up too extended? It doesn't seem to be, given all consideration for where it's at. I mean, if you look at it on a daily, then it starts to look a bit extended, but
Yeah.
weekly gives you a broader perspective. And
So would you call this a Bible
I've
gap
been on
up?
my hands about this one. The number of times it's had pocket pivots, and again, a lot of these sometimes they just don't work, and the thing just goes sideways. And then when it does work, it often it doesn't. It's a bit on the slower side. But right now, I mean, it looks like it's certainly been accelerating. And if you look at earnings, they're pretty lackluster. The sales are better. The industry group is strong. We're 23. So it's got good and bad, and that's why I'm kind of on my hands on this one.
So would you consider it a Bible gap up?
Yeah, I mean, I do consider it a viable gap up, but again, it's not like it's not screaming at me.
Gotcha.
Yeah, I mean, I've been debating. Yeah, should we put a report on this or what? And sometimes it's just better to go with the best. Where you're not when you're not neutral. In the neutral zone about it. I like the stock. I like everything about it, and actually the risk.
Oh, now
in
you
buying
tell
it at
us.
this level is very low, very very low. So everything's risk reward. So buying it up here, you sell it if it undercuts by a couple of percent, and you're out maybe 4% on the position, if that.
Yeah, I guess it's still workable, definitely, because your low here is what, 134, not too far from where it's trading right now, a couple of bucks.
Yeah, and I think that's really a big thing for me. Is of course the risk is very low.
Yeah.
So that puts me into favoring this one actually.
Let's see, GoGo's still going here, up at the peak of the day, 24.22. That's good. Trip, interesting. I was looking at this one last night. It looks on the HGSI charts. Let me pull this up here if I can. Let's see if it doesn't take 5 years. Here we go. Interesting. Okay, I'm just going to let that do its thing for a little while, but you can see it's pretty tight in here. And it looks, you got a pocket pivot here off the lows, and it's holding within that pocket pivot and holding above the 10 and 20 day confluence. You can see the sort of magenta or whatever you want to call that color, pinkish purple or purplish pink, I don't know, and the green, that's the 10 day here and the 20 day, and you can see it's been holding above that. It looks like it's trying to hold up. Price line has been holding up very nicely. And so the group might be acting, oh, man, what's going on here? Not sure. It's like taking forever. I'm going to have to talk to Ron about this. This is not really making the program look so good here if you got to sit here and wait 20 minutes for it to process. And I don't even want to look at this list not responding. Oh boy. Okay. It normally doesn't do that. I don't know if I'm running too many.
Yeah, it might be just a glitch, one-time thing.
But we'll wait for that to come up. When it does, I'll go back to Trip. Just remind me. Someone says, I thought the taper was meant to depress long-term rates, and the rates set by the Fed are short-term rates. If so, why can't the Fed taper long-term rates while allowing short-term rates to stay low? Well, they are. That's exactly what they're doing. I mean, if they're keeping short-term rates, below 1%, and they're tapering, that's going to have the effect of lowering long-term inflation expectations and dropping long-term rates. So that would have the effect then of flattening out the yield curve. But I don't know what that necessarily means in terms of what they're going to do, what it's going to do. I don't even pay attention to that crap. I don't even care if it's today's options expiration day. I just watch the stocks I'm interested in, and I trade them. And I don't worry about worrying, and I don't think about what the Fed may or may not do. I don't think about, whether the market's too high or too low, all this stuff. So I You can mentally masturbate all you want about the Fed and interest rates and all that, but the bottom line is just watch the stocks. The setups are there, and you just buy them and they go. You know, it's a little bit like shooting fish in a barrel, I'd have to say, in most cases. I mean, not every case, and you got to be in the right stocks, but it's like, for instance, if you bought LinkedIn late yesterday. Here we go. I'm just going to go to HGS reference groups. Oh, whoops, not all market index. Oh, that was a bad move. We went all securities. So now it does the famous Windows. Nothing more obnoxious than Windows. All these Windows programs, they turn pale on you. So we're looking at TRIP. I kind of noticed you're turning blue on the force indexes. Bongo Daily is blue. It's kind of there, and you know, so you're kind of watching this. If you wanted to buy it, anticipating a move up, remember earnings are due on 2/11. So let's see, Z. That's another one I've been watching. That one in Trulia, because they're trying to round out and come up. Because you got a pocket pivot. You could call that a pocket pivot because you close at the 10-day the day before, so it's really coming up off the 10-day. And it's trying to round out a new base. You can see it on the weekly chart. So it's definitely, let's do this. Definitely trying to round out, and Trulia doing the same thing. I even think you got a pocket pivot. You know, this is what I call a deep doo-doo pocket pivot because it comes from up off the 10 or the 20-day or both. I think it is. I'm trying to see if this exceeds. I don't know if it, well, let's see, 1, 2, 3. I'm not sure if it exceeds or not. But deep doo-doo pocket pivots are ones that come from off the 10-day, but they're below, the 10 days below the 200 and the 50. That's my new terminology for that sort of pocket pivot, a deep doo-doo pocket pivot. Let's see.
All these technical terms, love them.
Gilead. This one hit my radar yesterday because if you look at and this is kind of the perfect setup here. I get a little blue kahuna. It's not, you know, heavy, but everything's flashing blue. And it looked like it was going to go higher, and that was, I guess, day before yesterday, and then the thing popped out of there. I don't know if I've updated this yet, so it's still, I'm going to have to, I may do that right now. I don't think I've updated my system on this one, but that's what it looks like. It got very tight in there, and you see that on the weekly chart, and then it took off. I mean, that was kind of a no-brainer to me. Yeah, it's not going to download. All right, forget it. Let's see. Other questions here. Somebody says, Gil, were you looking at an O'Neill chart book in the Christmas card photo? Well, I was like 22 years old in that photo, if anybody remembers that from a couple of weeks ago, that a friend sent me with a Christmas card. And I was 22 at the time. At that time, I was my aspiration was to become a professional cartoonist, and at that time I was actually working on a comic strip with the LA Times Syndicate, and the comic strip actually got into 13 newspapers, and they canceled me because they said it wasn't enough newspapers. Interestingly, in 1969, I think it was, or 1970, Doonesbury, which is, you know, now a huge corporate franchise, Doonesbury got into 9 newspapers, and the Universal Press Syndicate, being a brand new syndicate, they kept Doonesbury, and LA Times Syndicate got me into 13 papers, and in 1981 or 82, that wasn't good enough, and I got dumped, and yeah, I was bummed at the time, but if I think about it, I don't think I would have made as much money as a cartoonist as I have as a trader, and so all that's to say that, no, I was not looking at chart books back then. Probably I was looking at studying with my sketchbook or something like that. Okay, moving along here. PCP always makes me think of, what is the chemical name for PCP, Dr. K, do you know?
Phenylcyclophenidine or something.
Phenylcyclophenidine.
I should know this because I've read a lot of books. Fascinated because you know, my chemistry background and all is you know, anything that's mind altering in a good or bad way is fascinating to me. And, you know, that includes all my studies into nutrition. But yeah, PCP, that would be one of the most phencyclidine.
There we go. Okay.
Is really one of it's really quite dangerous. It was an epidemic problem in the 70s apparently.
Really?
You know when you see footage of
One
guys
thing I've never
breaking
tried.
through handcuffs, when guys are breaking through handcuffs, it's
Yeah,
not because they're
that's
on
right.
any other drug but the PCP.
Ah, interesting. Okay. Yeah, when I was in college, we used to take PCP and go lift cars out in the parking lot. Let's see. Coors or PCP, I mean, this one's acting okay. Looks fine. Hanging in there. I think this might also be a follow-on to the airline, the movement in the airline stocks. So it looks fine. Coors, short. I don't know. I think you had to be short this earlier, you know, maybe on the gap down, the rally back up in here. I did actually short a little of this in here, and you get a little move on the downside. I should have held it, obviously, but hindsight is 20/20, and the market's going up. So there's more money, I think, to be made on the upside than the downside. So CBI, this is another stock that hit my list yesterday, holding very tight in here, and I think you have a pocket pivot somewhere right here, I believe. Yeah, and it's holding in very tight. When do they come out with earnings is the question, though. But it looks okay. I like it. Thinking about buying some, actually. NXPI.
Should be coming out any day.
This one, nice breakdown. Goldman Sachs, I think, downgraded the stock, comes right down to the 50-day line. That's generally where it tends to hold. You got a pocket pivot right here. We put a report out on that, and bingo, you're off to the races. THRM. What is THRM? Thermo something, right? Gentherm. It's kind of a thin stock. Trades, what, 336,000 shares a day, so it's very thin for me, kind of a
it's a small
V-shaped
cap.
move. I don't, you know, I've been looking at this. I see it in there, you know, right on my screens, because it does trade more than like 350, I think. It's acting okay, but it's pretty volatile, so you kind of have to expect that. You know, it comes with the territory. And I think that, you know, it's just the way of the world with this thing. But earnings up 129% last quarter. You got next quarter looking for 67%. Sales were up 21%. So it's not bad. Increasing sponsorship. I mean, it looks okay on that basis. The weekly chart probably looks a little more coherent, and what you actually see here is some volume support at the 10-week moving average. So that looks okay, but you know, a little bit V-shaped here. Maybe it backs in again, but it looks okay. I don't see anything wrong with it. XRS. I haven't even looked at this one. Has that hit? Oh, TAL Education. Yeah. What a strange symbol for that. Why isn't it TAL? Anyways, it's acting fine. I mean, you had a breakout here. I remember we talked about this maybe a month ago, a little less, 3 weeks ago, I guess, and it's acted well since then. So it's just holding up. There's really nothing there, no buy points. Somebody says, I assume you do keep an eye on when earnings get announced. Yeah, I do keep an eye on that. So because that can have a material effect on your stocks, and you have to decide what you're going to hold through on earnings. So yeah, but you know, to me that's relevant information. Worrying about, because it's specific to the stock, and worrying about what the Fed's going to do, or you know, whether it's going to be a cloudy day today, or any of this other stuff, to me that isn't directly related to the stock is kind of useless, and it's mental masturbation. But if you like to get into it, you know, rub away, as I like to say. Gigamon. I've been wondering if this guy is on his way back, and I've been watching this. Deep Cup, great story. Sort of a pocket pivot here, I guess you would call it, coming off the 50-day moving average. Is trying to come around. Still really thin, trades 134,000 shares a day, it looks like, and not really my cup of tea, too thin. But it looks like it's trying to round out. I'll be keeping an eye on this. You don't really have any strong volume figures, so notice how you close at the lows this week here, close at the lows of this week. You're not getting any support. Volume picks up on this week. You're closing at the lows. So maybe here you get a supporting week, and it's starting to try and round out. But if you like it, you know, keep an eye on it. I'd just rather be loaded up on GoGo today because it's still going here. Organovo. I own this. It's at the 10-day. That's a buy right there, in my view. Volume drying up, right up the 10-day. You can buy it. DDD coming back. Yeah, but you know, it's had a big run. I guess you're looking. You see big support off the 10-week line. That's constructive, and earnings coming up. So you got to decide what if you really want to hold that into earnings. But that's next month at the end of the month. But it's acting okay. I mean, you're getting support off of the 10-week line. The other ones I've liked are PRLB, Proto Labs, Pocket Pivot here, I believe. Let's see, 1, 2, 3, 4, 5. No, I'm wrong. It's somewhere in here. Or is it here? I don't know. Whatever. To me, this is a Pocket Pivot, though. It's 9 days. On this day here, you held tight. So to me, that's more an accumulation day. And so you go 1, 2, 3, 4, 5. Yeah, I mean, if you count this day, you would say that's not a pocket.
Missed.
Yeah, but to me, that's close enough for hand grenades, horseshoes, hydrogen bombs, and stocks.
The consolidation is really constructed right into it. So,
yeah,
I mean,
and look at this move.
contextually, it's not a bad way. I mean, the pocket pivot definition is what it is, and that is proven out. But you can get other circumstances that outweigh a near miss.
Yeah, and I even find in this market you get 5-day pocket pivots in certain formations, and they'll work.
Sure.
And FB, Facebook has gotten a number of those on the way up, and that's looked pretty good. So, anyways, Cena, I think I already talked about that. That was a late-stage failed base. I actually tweeted on this yesterday as it was failing. And today we gapped down, so that's pretty damn ugly. I mean, you're not going to buy it. You can't short it here either. Biogen. Bio bore me to death. Yeah, this thing, nice jack to the downside and then right back up, holding tight. You're going into earnings next week. It's just holding at the top of the base. You could say it's holding the breakout here, but, it's flopping around, so it's all going to depend on earnings. Electronics for imaging is one. No, wait. EFII. You get a breakout here. So you had some pocket pivot. Here's a little stalling pocket pivot here. You had some other pocket pivots, I think. That was not. Just one. Couple right here. And it's breaking out and coming back in. I'm not really a buyer of this stock because next quarter's estimates are 5%. Sales are up 16%. It's just, if I'm going to buy a tech stock, I'm looking for something that's a little bit hotter. I think the other thing is it trades 368,000 shares a day. Not really my cup of tea, to tell you the truth. So, if you want to buy it on the pullback, then buy it on the pullback. And the other thing is, we're getting back to the saying of like, am I supposed to bless this for you? Like, yes, sell your house, your wife, your kids, all your cars, and whatever other worldly possessions you have. Take the money and put it all into EFII right here. I mean, if you're operating on a rules-based, on the basis of rules, okay, you have a breakout here on heavy volume. Stock pulls back to the top of the base, okay? I can't tell you whether this thing is going to bounce off here and turn around and go higher. But if you see this as support, 38.49, say at the 50-day, or use the 10-day, which is a little bit higher, let's like say 38.88, you could buy a little bit here, and if it fails, you just blow out of it very quickly. So, if you're rules-based, there's your rule. You pull back to the breakout point. Maybe it becomes viable, but earnings come out next week, so that's the issue, I think. And probably what happens is people sell into the earnings before the earnings, and you'll see stocks pull back. I saw that in Schwab the other day. Came down to the 50-day moving average, and then earnings came out yesterday and stock broke out. And that's a little flag breakout, kind of extended, but that's what will happen. You'll see stocks break down into earnings, and that's why you have to decide what you're going to do with them ahead of time. So let's see, RGN, which, no, is that right? Repligen. I don't like this stock, too thin. $12 stock trades 450,000 shares. I like a stock like Organovo as a biotech because this thing trades 70-something million a day in daily dollar volume. And to me, that's what I want to see. That's really an institutional stock. Repligen, I don't know. It's thin stock. It's subject to these wild moves. And so, to me, it's not something I'm all that hot on, and it's pretty cheap, Let's see. Uh-oh, here we go again. Here's one for you, Dr. K. You ready? Based on your experience, with all the positive action in a rotating list of leaders, taking into account the frothy action on the upside, is this typically seen in a market that's topping or nearing the end of a bull run? I don't know, it kind of reminds me of 99, but go ahead, Dr. K.
Yeah, I mean, see, overbought can get more and more overbought, and that kind of activity can persist, which is why I've always found it difficult to sell into a top. I want to wait for some sort of confirmation for my sell stops to get hit. Otherwise, I find that I'm often selling too soon just because everyone's saying, oh, these prices are too high, everything looks so good, it's time to sell, and people usually get it wrong when it comes time to calling tops. And of course, if you get a lot of frothy activity with a lot of leaders and they're all going through the roof, it's contextual. Keep that in mind. Context is all important. And there was a time, April 14th in, I believe this is 1999, or no, I think it was 98 actually. It was all the internets just started to go up ridiculous amounts in a couple days after having huge runs. And that to me was a blow off top for the whole group. And if there was an internet index called INX, and it's I don't think it's around
Still
anymore.
around? They got rid of it.
Yeah, they got rid of it, but that showed you a massive blow off top going on in the internet space. So that was a rare exception where I actually stepped in the next day. The next day things were
I remember
down.
that.
And then the next day after that, that was when all hell broke loose. And I remember giving a long. I was fully on margin, and I went basically from 200% long all the way down to about 30% long, just in one go, right at the open. Just I said this is not a good situation. Everything's is due for correction. And sure enough, that 30% that I held on in my account, it got clobbered. Everything got clobbered. I remember, a lot of these high-flying names that were companies that were attaching .com to their name were doubling overnight, right around that time. So yeah, that's a great example of too much froth. Contextually speaking, it's time to be very careful about taking profits.
But how does this all apply to the market now? To me, it's just another trying to come up with some blanket view or assessment of the market. Like is there some froth indicator that you get to, and once the froth has reached too much? Usually, for me, if it spills over the glass, that's when I've got a problem. And it's but with all the positive action and rotating lists of leaders, well, you just answered your own question. All the positive action, does that mean you freak out and sell everything? No, that's constructive. Taking into account the frothy action on the upside, well, what you're seeing is stocks breaking out, like this Nuva, for example, and pulling back normally and then going higher. Why is a breakout and then an ensuing move higher frothy? Now, maybe you might say Illumina is frothy, but why is a breakout, even with YY, for example? You have a breakout and a strong move to the upside. Why is that frothy? That's just a breakout and a strong move to the upside, which is a very nice thing to see. So, and what does that mean? Oh my God, this is frothy. The market's topping. No, it's this leading stock breaking out, big volume buying, and going higher. And why do I need to try and assess whether something is frothy and rotating leaders and all this stuff? You're just like making up BS to occupy your brain with when you really should be hunting down setups and looking to buy stocks. That's my take. Maybe that's.
And this is also why it's important to stay with the markets day to day, because then you get a sense. I mean, that's what we do. We get a sense of when things are getting really unusually out of hand, and that kind of a period is very, very
if
rare.
you get climax tops, which is what you saw in March of 2000. I mean, there were climax tops everywhere, and that was sort of like the sign to dump everything. Right?
Yeah, March was that was certainly a turning point, and I remember we weren't talking to each other like well, you and I were, but people, other Bill's handpicked guys. I think there were expanded about 9 of us. No one
I was foot-picked,
but everyone is back in cash pretty fast. I think within a few days off that.
Right, because you saw everything was a
the same
climax
thing.
top. Right? I mean, that's the sort of thing I'd be watching for. And I don't think normal breakouts followed by upside movement like you see here is fraught. I think that's just healthy breakout action, and maybe some of the better breakouts we've seen in a long time, or maybe some of the best follow-up action we've seen in a long time, which I think is constructive. Maybe the market's going to go into a big blow-off move, but don't start worrying about it. Figure out how you're going to play it. That's what I would say. And so far, there have been plenty of vehicles, and we put out tons of reports on stocks that had pocket pivots, like the YY, for example, down in here. I mean, geez, what more do you want? The CSIQ down here. These are strong moves. SunPower, which I think is a little slower name, try to break out. But to me, we reported on two of the strong solar names, Solar City and Canadian. They're moving. We got this email from a guy who canceled his subscription because he's trading options and he doesn't think that the names that we put reports on move fast enough. And I just had to laugh because that same day, we put a report out on this one, which went from 11 to 19 and like nothing flat. So if you can't make money with that, you can't make money.
And Organovo. I mean, we've had a few. Organovo doubled in about a week.
Okay, here's where an interesting question came in the email. Somebody quoted IBD, uptrend under pressure. And then the person asked, should I sell my Facebook? First of all, why are you asking us whether you should sell your Facebook on something IBD said? We don't work for IBD, and we don't make their calls. But I can tell you one thing. The day that IBD came out with uptrend under pressure was Monday, and of course that was a low. So, and on that basis, do you just start dumping stocks because IBD says uptrend under pressure? I don't think so. I think you watch your stocks. In this case, Facebook came right to the 20-day, and it's entitled to a pullback. It's had a big move. It's basically building I wouldn't call this a high handle. I just call this a new flag formation. Very tight, holding along the 10-day. Earnings coming up at the beginning of February, I think, and I think the tight action in here looks to me like it wants to go higher. And maybe it drags LinkedIn and Twitter along with it. So it looks fine to me. In fact, like I said, go ahead.
If for some reason you miss a climax top, major one. I mean, a couple of my rules are if the stock, in very rare cases, the stock will go up hugely 3 days in a row. Look to sell when it starts to reverse, because it will. But the odds are very good. I mean, when I say goes up huge in 3 days, I mean we're talking a 50 to 100% gain, very unusual gains, and it's going to get exhausted very quickly. But those are little sub rules that I've discovered over the years that tend to have the odds tend to favor getting out in that situation and keeping your profit. But if you miss a move like the rare in March of 2000, if you miss that climax top, obviously you're going to have sell rules in place that will be such as violation of the 10-day moving average, things like that, or 50 days. So you're inevitably going to get out of your position, and you're not going to be like one of these guys later in 2000 that got absolutely shellacked because they held onto their positions too long. Or worse, if you look at track records in 2001 and 2002, it's like visiting a graveyard.
Yeah, I'll go with that. Someone asked about fuel. But this name is interesting. They make this platform that helps, I guess, automate or assist in digital advertising decisions. You've got the stock forming a cup with handle. It's wedging a little bit here along the lows. You only have a 1-week handle because these 2 weeks are up. So you're trying to, on the daily you can see like a 1-week handle here, a 6-day handle. It breaks out, and then you pull back in. This looks interesting. I mean, I kind of like it in terms of the concept, and the sponsorship is very strong. Now, apparently their earnings come in the fourth quarter, because in 2014 they're not going to show a profit until the fourth quarter, 25 cents. And then they show negative earnings for the next 3 quarters of 2015, and they're supposed to make 51 cents in the fourth quarter of 2015. But by 2017, according to the analysts, they're supposed to be making $2.95 estimated. So this thing is potentially a hot little mover, maybe like the FEYE. Whoops, let me get that right. But the one thing about FEYE is trading like closer to 900,000 shares a day when it got moving. This one's real thin, but it looks interesting. So I definitely keep it on your radar. If you're feeling lucky, you could buy the stock on the pullback here, trying to break out. Earnings come out at the end of January, so you want to be cognizant of that. AEI. What is AEI? Sounds like a dull name. No, AEIS. Advanced Energy. This looks okay. It's not. Let me pull up the chart here. No pocket pivots. I guess you might. Not really any buy points in here that we would identify, but you do get a breakout here. You know, I call this a breakout through the low part of the base, or even here. That's sort of a pocket pivot breakout. Pulls into the 10-day and moves out. That's an interesting name. Looks okay. Kind of thin though. Trades 518,000 shares. Not too bad. But next quarter, they're looking for 200% increase in earnings. They're going to report the first week of February, allegedly, and so that looks pretty decent right here. Looks okay, but there's no buy points. It's a little extended. Let's see here. Wow, we're almost through a whole hour. Q-Core. Probably pulling in today. Yeah, I figured it would do that. You come around here, that's a big move up. I would only want to buy closer to the 50-day. Same thing with LinkedIn. You know, when you're doing these sort of roundabout pocket pivots, you'll notice it's very choppy in here, not really so tight, and so you do get the pullback. Q-Core is a little choppy in here too, not really rounding out nice and tight, you know, and starting to set up nicely. And to me, it's not really a name I'm interested in buying. It's too news-oriented. But you did have the pocket pivot. SuFun, I don't like this name because it's not marginable, and I just avoid marginable names. But, you know, stock's holding tight along the 10-day moving average. When do earnings come out here? Come out second week of February, it looks like. So, you know, it's basically just hanging out. I guess you're looking for a pocket pivot to develop along the 10-day moving average. See if that does. Finisar struggling. Finisar is just building, to me, a handle. You know, you got 2 weeks, 2 red weeks in here. So, you know, maybe it's starting to build a little handle here, which is, I think, what it needs to do. It's probably waiting for Cisco earnings, and then maybe it does something then. But I wouldn't say it's struggling. It's just building a handle. So remember, it's come off the lows here. I think the low here was 1943, and you're up, you know, almost 15-20%. So it needs a little time. And my guess is you're going to see it do something at some point, but it doesn't seem to be happening right now. You've got all these little ants on here, which tells you the stock was up 12 out of 15 days in a row or better. Amazon, let's see. Amazon's hanging in tight, and you know, we're tight, very tight on the weekly, coming off the 10-week line. It looks okay to me. Probably going to see something happen on earnings, you know, where it really starts to move. But you are working on a pocket pivot today because it's not even midday, and you're trading just under these days here. So I think you're going to get above this day by the close. So maybe setting up for a pocket pivot. You want to keep an eye on that. Uh-oh. Well, thin little stock, cheap little stock, and I don't see any buy points in here. It's just a pocket pivot. I guess maybe just barely cleared that. Volume 360. What was the volume there? No, 556. Here you're 587.
Yeah,
no, that's not. No, it's extended. I'm not really a buyer on this one yet. Kind of interesting though. Hasn't hit my radar, I think, because it's kind of thin. Doesn't trade enough dollar volume. But holding in a little tight flags. Look at the weekly. But it's up there, so it's just hanging on. Wooba. This one's on my watch list, but... oh, come on. Yeah, this is just up there. There's no buy points. It's acting fine. This is probably the buy point down here on a pocket pivot. Did we put this out as a pocket pivot report, Dr. K? Do you remember?
Let me check right now. I don't believe we did.
No, it's really
well, let's see. If we did, it would have been on the 7th. Let me just check.
Yeah, it's not
We've
that
got a lot of pocket pivots lately.
It's a Japanese, or not Japanese, a Chinese stock.
Yeah, no, we did not.
No, but it's up there. So if you saw this, I guess you could have bought it there, but it's pretty volatile Chinese stock, but just moving higher. So I don't know what we're supposed to tell you here. Perrigo, not really a name I've been interested in. Medical generic drugs, I think there's better names in the biotech space. So, I'm watching Organovo here. Almost pitching a 620 buy here. Let's see. Let's go through some others. We're almost done here. So he says, aren't we waiting for retail to get in order to start thinking about tops? I don't know. Are you in? Because you're retail, I think, unless you're an institutional trader. The top will be when everyone is convinced there is no danger of topping. Well, to me, that's just more, trying to come up with some masterful macro view that probably is, just that, nothing more. Some on ONVO you like now, even though losing money, and has market cap of 870 million. Hard to figure why volume is so high at 6 million. High beta. I don't know what planet you've been on, but we actually put out a pocket pivot alert here on this one under around $9. Initially down here around $6. So I like it now. It's moved up, and it's up a good 20-30% from that last pocket pivot. And you try to break out here, and I would suggest also studying biotech stocks, because a number of biotech stocks, Intrexon going bonkers, and that has had no earnings until recently. I think they're making like a penny. And there have been others, SGEN going higher on no earnings. So biotechs will do that, so if you understand biotechs. But if you're just a CanSlim, an unthinking CanSlim robot, and you have no real perspective of various groups and the characteristics they will have, you don't know then that biotechs can show no earnings and go much higher on just a conceptual play, which seems to be what Organovo is doing. So, and to say that we like it now is fairly inaccurate, because we gave pocket pivots, put out pocket pivot alerts on that a long time ago. Anyways, Yandex. Yandex just holding tight, not going anywhere. So, I think the foreign, I like these, YY and Kihu are doing well. I'm not so sure about Yandex. So, I mean, it's hanging in tight. You'd be watching for some kind of pocket pivot. Tried to go higher here on that day, but failed. Somebody wants to redefine what they mean as frothy. Frothy as in 20 to 30% moves in a day. I haven't seen any 20 to 30% moves in a day. Have you?
Unless they're microcap.
Yeah, I haven't really seen any like that.
If the whole group has a huge move like that, either it's the beginning of something or the end of something. And that's what happened on April 14th.
Yeah. So, but again, we watch your stocks. I think it's just a matter of doing that rather than trying to ascribe some overall view of the market and then operating on that basis. Like the guy who emailed us the other day wondering, because IBD says uptrend under pressure, if he should just sell his Facebook. So I should also point out that we don't provide individual investment advice. So if you email us asking what you should do with this stock or that stock, we can't really tell you. So uptrend under pressure means be very careful about new buys. Yeah, well, that really helps you a lot, right? Because on that day, you could have bought Solar City on the pullback to the 10-day, and the thing turns around and jets out of here. On that day, you could have bought CSIQ on the pullback to the 10-day moving average. So to me, it's all just pointless. Market under pressure, I don't know. To me, it's just...
That's equivalent of basically them saying, go to cash.
Well, yeah, and to say be cautious with new buys. Sometimes a pullback like that is where you want to lay into them, if you're operating on the basis of my ugly duckling theory. And so I don't really understand why anybody needs to needs to worry about any of that. Just watch your stocks, and if you see something that you want to take a shot at, go for it. Set a stop, figure out where you're going to sell it if it doesn't work, and buy it. But I would never base my buying on what some comment made in a newspaper by newspaper writers. So Finisar, I already talked about this. It's stock just building a handle. That's all it's doing. You see on the weekly chart, nothing more. VIPS, Century Rule applicable. Well, the Century Rule isn't something that you decide whether it's applicable or not. Either it is or it isn't going to work. That's the base idea. So if something goes up to the century mark and you want to buy it there, you can go ahead. I don't think in this market necessarily means that it's guaranteed to go higher, and particularly that I can tell you that ahead of time. So I think in most cases you get the buy signal like that and you can go for it. Look at a stock like Amazon, hits 400, but can't really get through it. So what is that telling you? It's just telling you it's holding tight. So I'd kind of focus less on that and more on the action of the stock, the chart, and operate on that basis rather than just saying, oh, something went through the century mark, now I'm just going to load the boat because it's definitely going higher. That's not necessarily the case. So thoughts on Q-Core. I think we already talked about it, but what is there to think? You had this pocket pivot. Like I said, I wouldn't be buying it up here, and it's really kind of choppy, not something I play. Tesla, good week. Tesla's hanging in there. You got this buy point, but to me it seems like it's a breakout from a low handle, so I don't know if it's going to work or not, but if you want to buy it into earnings on with the idea that it's going to continue higher or jack on earnings, I guess you could do that, but it's a little extended, I think, for my money right now. We're going to finish up here. Blocks. Well, Blocks is trying to round out. Here's a deep doo-doo pocket pivot down here, and it's trying to move its way higher, but it's kind of up there now and not really in a buy position. Gil, thanks for your analysis. I'm doing very well with your picks. You guys are really good. Thank you. AFOP. This one, I wouldn't buy this. It's a thinner stock, and the group is not really doing that well. So you get a big pocket pivot here pulled in. Did we put a report out on this one, Dr. K, or did we blow this off?
It was too much of a low-quality bottom feeder.
Yeah, so
you got better names, so you better, in this kind of market, you shouldn't be bottom fishing.
No, I think I'd be doing, unless it's a quality name. So, because I'll bottom fish on some of these names. If they have the right type of base, and I think the earnings are strong. But let's see. Last couple that I'm going to do here. In Vincennes, just building a cup with a handle. You only have a 1-week handle, so to me it doesn't look all that great. Let's see. Did you say the average dollar volume for institutions to be interested in a stock is around 70 million? No, I said Organ Novo trades around $70 million, over $70 million in average daily dollar volume. So looks to me like somebody doesn't like LinkedIn here. They're dumping it now. I may have to back away from this. We'll see what happens. Let's see. RGR went kerplop. Yeah, but you had to be buying it down in here on the pocket pivots. Now it's just back to the top of the base. INVN. We looked at that. VIPS, 100 Livermore rule. Well, if you want to operate on that basis on VIPS or any of these things, you can. But to me, it's not some guarantee that it's going to go higher. I noticed the rule doesn't seem to work all that well these days. Anyways, entry point for CTRL. I don't know. I don't see any entry point.
It's way up there. I mean, if you're sit tight if you've got a position, but don't be looking for an entry point because right now it's going to go quite volatile after what it's done.
It's the greed entry point. The other thing is this thing trades 115,000 shares a day. It's definitely not anything I would be interested at all. So thin little stock. But again, you're asking us for advice, as if we're going to tell you, oh yeah, you can just buy it here. I mean, it's stock's up there. You had to be in on it down here. Maybe this was a viable gap up and be anticipating the move higher, either on the Bible gap up or if you saw some pocket pivots down in the base. But at this point, it's way overdone on the upside. An example is FEYE up. Well, that's a Bible gap up. This was a Bible gap up move, and that's, a Bible gap up move. That's a strong move. That's not froth. Obviously, because the stock didn't top, it's continued a lot higher. So, PIII.
Yeah, reader rules on viable gap ups. That's a really constructive base that it's gapping up out of, and the story is very unique as well. So, it's got all the things going for it.
I don't know. We got to wrap this up. Any others? Gil, what is the largest number of individual positions you would hold? I don't know. I don't have like some number, max or min. It just, if I see, 2 or 3 or 4, I might be trading at once. I think that's really all we got time for. A lot of questions today. EPAM, real quickly. EPAM systems trying to come up around, but they're, these are extended from buy points. So what you should do if you're going to ask us a question about a stock, I think you can answer your own questions if you ask yourself, what are the rules for pocket pivot buy points? What are the rules for breakout buy points? What are the rules for viable gap up buy points? And then you figure out whether the stock in question is issuing a buy point like that, and then you operate on that basis. The idea that a name that's up extended from the 10-day and whatnot, and you're asking us about it, why would you ask us about this? Or any stock that's doing this. There's nothing going on here. It had a move off the 10-day. It's moved higher for the last 4 days, and it's not in a viable position if you understand what constitutes a viable position in the stock. So I think a lot of these you can answer your own questions.
Remember, always the greed factor that kicks in because people feel like they've missed it and they want to see if they can still get in.
Nest, here's a good one. Yeah, I think you buy a bazillion shares here at a penny. Anyways, that's really all we have time for today. Noodles is trying to come around, but I don't know. It's still, to me, not rounded out well enough. This is what it looks like on a weekly. That's pretty much all we've got. We ran over today by 10 minutes. So anyways, thanks for showing up again, you guys. I hope this was helpful. If you have any questions, you know where to email us. Otherwise, we will catch you next time, and we'll talk to you later.
So long, everyone.